Hello everyone. Yesterday there were two very important events that took place. One, Fed interest rate decision with the Fed chairman's press conference, and the second, collapse of Rupee forward premium, which might be the very important potential reason why FII is selling now in Indian market. So in this video we are going to look both of them in detail. First, let's discuss about the Fed interest rate decision. As expected at the end of FOMC meeting, Fed kept the interest rate unchanged, and in the press conference as his initial speech, Fed chairman said that he was very much happy about the inflation decrease, and for the moment he don't think he need to increase the interest rate today. About the future rate hike, either in December month or in the upcoming month, he will decide based upon the totality of incoming data. And more important, so far in the last 18 months, they reduced over $1 trillion as part of quantitative tightening, and they expect that quantitative tightening is to continue in future as well in order to have tighter monetary policy. Quantitative tightening means taking out the excessive currency that's in the circulation, and as per their balance sheet, they need to do $3.3 trillion more. So that's the overall summary. Following his initial speech, various reporters asked him various questions. But as usual, we can summarize all of them broadly in 4 questions. First, will it be a recession because of this longer rate hike? And what's his view on strong labor market? Second, PCE inflation in the past 3 months, it was around 3% and it's not reducing. So now pausing the interest rate increase means, are we not doing too little, so we need to worry in the future? Third, what's his thoughts on treasury yield increase and its impact on US banking system? And finally, about the Middle East conflict and its possible impact on US inflation. So first question, will it be a recession because of this longer rate hike? And what's his view on strong labor market? So far in all of his press conference, he always gave the worrying statement that labor market was too strong and housing market was not slowing enough kind of. But last night he said kind of exactly what we discussed in the end of inflation video. If anyone fancies seeing that, I will attach the link in the end of this video and also in the description below. Anyway, he said that increased labor participation now brought the labor supply and demand to the balanced state. Thus, it eases the supply side concerns that raised during and due to the pandemic. Basically, what he's saying is this increased labor participation, instead of increasing the inflation, it did help to reduce it. Then for the recession, he didn't think and he don't see that happening since in the last quarter, US GDP increased by 4.9%. Then the second big question, PCE inflation in the past 3 months, it was around 3% and it's not reducing. So now pausing the interest rate increase means, are we not doing too little, so we need to worry in the future? For that, he said earlier 1 year ago, PCE inflation was very high above 7%, so it did reduce very fast. Now it's around 3%, which is closer to the 2% target. So it's understandable that the rate of reduction is slow, but on the positive side, compared to last quarter, it dropped 0.6% and it keeps on dropping, not increasing. Then regarding pausing the interest rate increase means, are we not doing too little? For that, he said again a year ago, he got the risk and worry that he was doing too little. But now he feels he has no risk that he is doing too little or he is doing too much. Rather than he felt he is doing what is required for the condition. Third question, what's his thoughts on treasury yield increase and its impact on US banking system? He said increase in treasury yield is due to various factors. The quantitative tightening did play a small role but not much, and multiple times he mentioned this undervalued stock price and strengthening of US dollar played a big part. So he is not at all worried for treasury yield and he expected to settle. Then regarding its impact on banking system, he said unlike March, US banking system is very resilient now and they are monitoring with the banks very closely, and also if banks required quick money means the policy that in place from March is sufficient enough and Fed is ready to support banks as well. But as per the latest situation, there is no worrying signs on the US banking system. And finally, about the Middle East conflict and its possible impact on US inflation. He said in their financial stability report, they highlighted it as a potential risk and its intent is to highlight, but it's not yet happened nor showing any signs of happening. Because of the conflict, oil price increased temporarily, but it's now cooling off and he expects it to further cool. So that's it. That's his condensed 1 hour press conference summary. About the full video, I will attach in the description below. If anyone fancy, please have a look. Basically, he said everything is under control and so far he's happy about the progress. For now, he thinks he's near the peak of rate hike cycle and finally he thinks inflation will be under 2% before the next September. About the future rate cut, he haven't decided any. Now, because of his super dovish comment, last night US market closed super positive. 10-year bond yield dropped to 4.7% and even oil price further dropped. Anyway, in the end, Dow Jones increased 0.67%, S&P 500 up by 1.05% and Nasdaq rallied 1.64%. In case of VIX, after reaching over 21 last week, now it also collapsed to below 17. Regarding oil, at the time of this video, Brent crude is trading around $85 per barrel and WTI crude is trading at $81 per barrel. And unlike last 2 days, US market positivity was transferred to GIFT Nifty. Early morning today, it closed at 19,185, equating the premium of 70. For now, it's indicating the gap up opening of over 120 points. However, that positivity was not transferred to Indian ADR. Only ICICI Bank closed marginally positive and other 3 ended negative. Again, all 4 closed more or less in line with the Indian market. And one more thing is, this Fed Chairman conference happened at between 3 p.m. Eastern time and 4 p.m. market was closed. So literally there is no time for Indian ADRs to react for it. But that was not the case for GIFT Nifty. It did traded 2-3 hours after the Fed Chairman press conference. So that's all about the global market. Now let's move to the India specific info. Because of this recent high US Treasury yield in the recent weeks, it created now huge dollars liquidity concern in the Indian currency market, which in turn made the rupees 2-month forward premium to lowest value in the decade. Just in case if any not aware of this, 2-month forward premium occurs when the forward exchange rate is priced higher than the spot exchange rate. Higher the premium, the expectation of the market is that the domestic currency will be worth more in the future or will appreciate in value versus the foreign currency. Similarly, it's opposite for the lower or negative premium. If required, please pause and have a look. Yesterday, 2-month rupee forward premium dropped to just 14 paise. In comparison, at the start of the year, it was around 40 paise. And if you look at the history, the similar level forward premium occurs at the end of 2012 and exactly the same time where rupee started to fall from 40 rupees per US dollars to all the way up to 68 rupees per US dollar in 2013. I mean, for domestic investors or institution, this is not a big deal. But for FII, depreciating rupee is always eat up their returns and that's the reason why FII is now turned as a mega sellers. Anyway, back to market. Yesterday's negativity was created by this low forward premium. Poor China manufacturing made our metals to crash and also nervousness related to this Fed meeting all made it to close negative for the second consecutive day. Here the takeaway is, now we need to keep an eye on this forward premium as well, since this forward premium drop and increase more or less coincides with FII buying and selling. In line with that, for the 6th consecutive day, FII was net sellers. Yesterday, the net sold for 1,820 crore rupees and to support the market, DII net bought for 1,620 crore rupees. Here, please note the trade volume together between both FII and DII was around just 75% in comparison to their recent average trade volume. And one more thing, yesterday, India's manufacturing PMI data came as 55.5 below the expectation of 57.7. So that also did contributed negatively. As a summary, rupee premium collapse is a larger worrying sign, but last night Fed Chairman dovish comment might support and prevent the rupee premium decline in future. And also now global momentum improved very much as US market closed super positive. For now, GIFT Nifty is indicating gap up opening of over 120 points. Even in case of Reliance GDR, it increased by 1.5%. Overall, everything indicates market to open around 19,050 to 19,100. Let's see whether it's sustained throughout the day or not. About the things to look out, today Tata Motors, Adani Enterprise, Adani Power, Dabur India, Berger Paints, Bombay Dyeing, Gujarat Gas and IEX are some of the major Indian companies' earnings results are scheduled released today. Regarding macro, just before the market opening around 9 am, there is an auction for 10-year Japanese government bond. Again, last month it auctioned for 0.8%, which was like 8-year high value. And also yesterday, Bank of Japan intervened in the government bond market and they did an emergency bond purchase as the yield increased to 0.97% in the open market. So it will be interesting and possibly affect if it crosses 1%. Then during our market hours at 2:30 pm, lots and lots of Europe related macro including whole Europe manufacturing PMI data and also individual countries one like for Germany and Spain. In addition, Germany's unemployment data is scheduled. Then in the aftermarket hours at 5 pm, Bank of England's interest rate decision, and in the night for US, their weekly job insurance claims data, factory orders for September month and Fed balance sheet are some of the items we need to keep an eye out today. Coming to technical, Nifty opened marginally lower and for most of the session it was in the negative territory and in the end it closed below 19,000 and near to the day's low. Thus, it formed medium bearish candlestick pattern with both minor upper and lower shadow. Basically, for the second consecutive day, Nifty extended its selling pressure and in the daily chart, it now had a RSI negative crossover as it moved below 35 with lower high and lower low formation. Hence, if the selling pressure further intensified means and if Nifty breaks decisively 18,940, then breaching 18,838 October low can't be ruled out and it's the more probable one as well. In case of a bounce back, 19,100 is the immediate resistance and a breakout above this might trigger the short covering moves towards the 19,250 to 19,300 range. In case of Bank Nifty, unlike Nifty, it traded around 42,750 and closed at 42,700. Thus, it formed a doji-like candlestick pattern. Not last session, before that, Thursday to Tuesday, in those sessions in all four consecutively, Bank Nifty formed the lower high formation. Now that was negated or becomes ineffective. Now it has to cross and hold above 42,750 levels for an up move towards 43,000 and that's the immediate resistance. If it breached above, then that could trigger the short covering moves towards 43,500. Conversely, the lower end support is at 42,400 and if it breached on a closing basis, it may escalate the selling pressure. On the options front, the maximum call option open interest was visible at 19,100 strike, followed by 19,200 and 19,300 strike, and the maximum new call writing is at 19,100 strike and then 19,000 strike. Meanwhile, the maximum put option open interest was at 18,800 strike, followed by 18,900 strike, with new maximum put writing is at 18,800 strike and then at 18,600 strike. So from options data, it also indicated that Nifty might face resistance at 19,100 to 19,200 with a support at 18,900 to 18,800 levels. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.